Hello traders, this is Brian from FinancialTradingJournal.com. Today is September 28th, 2013, and welcome back to this week's FX Weekly Analysis. For those of you that attended the trial launch of my service this week, you'll know that this week was pretty bad. The markets was not, I wouldn't say confusing to trade, but the markets weren't really respecting price action levels, so it was a weird week. Most Forex traders would agree that this week was pretty bad. Basically, as I mentioned last week in last week's FX Weekly Analysis, going into this week, we were waiting for the results from the German elections. The results from that was mixed based on market reaction. There was pretty much a confusion in the markets because euro dollar didn't react that well. It didn't actually move that much this week at all, for that matter. Across the board, dollar CAD stayed the same, euro dollar stayed the same, Aussie dollar surprisingly went down while pound dollar went up. Midweek, the market focus, quote unquote, was on the US debt ceiling and whether or not the US government would shut down, and that's the concern going into next week, so that's going to be interesting. The other interesting thing to note is this is the last full week of the month and of the quarter. Officially speaking, we still have Sunday night and Monday as well, so September 30th is next Monday. That will be the last day of the month and of the quarter, so that's going to be pretty weird and volatile. And then going into October, that will be the beginning of Q4. So pretty interesting times coming up. Also, October is earnings season as well, because you're going to have quarterly reports coming in from all the companies, all the countries, etc., and all that stuff. So that's going to be fairly interesting, combined with the fact that U.S. government may or may not shut down next week, which will ultimately affect whether or not NFP report comes out or any of the reports statistically comes out or not. Also, the last thing to note is on Thursday night or Friday morning, depending on what time zone you're in, basically around Asia afternoon, I think that's when it came out, around 2 a.m. Eastern time on Friday morning. I believe that's around when it happened. One of the newspaper companies in UK, I think it was Yorkshire newspaper. I'm not entirely sure. Don't quote me on that. They reported an article of an interview with BOE Carney, Bank of England Carney, and in that article he quoted that he does not see any necessary means for further QE unless UK improvement is not good or something like that. So given that he said there's no QE for UK, pound dollar just surged up pretty much overnight. That announcement came out while I was asleep, by the way, so I didn't see it happen, but based on looking at the charts, it moved up about 50 pips based on that announcement, and then went back down about 20 pips or something, and then the following day on Friday it just kept going up. So that's the market summary part of the FX Weekly Analysis. That's what I do for every FX Weekly Analysis. I think it's nice to start off with a summary of what happened this week. Those were the big headlines this week. Going into next week, we're looking at the US debt ceiling and whether or not the US government will shut down or not. So anyways, let's get started. So as I mentioned in the beginning, dollar CAD and euro dollar didn't really move that much, so I don't really have much to say on these two pairs. I'm gonna keep it fairly short across the board because we had a bad week. There's not much to talk about. I'll just focus on the important points. Dollar CAD, the last thing I mentioned last week was whether or not dollar CAD would keep going down and form an engulfing bearish candle. We still have 2 days left, so I don't know what's going to happen. We're going to see what happens by Monday. But as it currently stands, we do not have an engulfing candle yet. So if it closes like this, then it's pretty good for bulls because it doesn't look like we're going down on a monthly time frame. But that's not to say we're not going down on shorter time frames. Weekly chart, we have a doji this week, as I mentioned. We didn't move, so the doji after the pin bar, we're not really sure what's going on in the markets just yet. If this was a solid green bar up, then it would keep going up, but we don't have that. So going forwards, not really sure, but based on the daily chart, we do have 2 pin bars, and these are shooting star candles. So that does show a slight reversal. As I mentioned in last week's forecast, what we were looking at coming into this week was we were targeting the 1.02, 1.015 area. So it's supposed to be going down, and I expect that going forwards to at least test those levels before we bounce again. So short term, it should go down based on the 2 pin bars on the daily candle. 4-hour chart, nothing to say. The most important thing was on the daily chart. On the 4-hour chart, what we had was a small tiny channel that just lasted throughout the week, basically something that looks like this. And I mean, that was pretty boring. You could have scalped this for about, I think this was about like 30 pips up and down, but that would have only happened a few times. Realistically speaking, the channel was something more like this, so that channel was only 15 pips, so it was really slow across the board for dollar CAD. So that's it for this pair. Up next is Aussie dollar. Aussie dollar, interesting. It went down. I found that a little surprising. I thought it would keep going upwards towards 95, 96, as I mentioned last week. And on that note, I've decided to adjust my level. I'm no longer targeting 95, 96. I'm actually targeting 97 now. 97, I think, will be the best reversal point going forwards. That is the 50% fib from the drop from 1.06 down to 0.89, which is right here. And it also coincides with these bounces here. Previously, I wanted to go to the tip of this candle, which was the 957 area, but I don't think that's going to happen. So bouncing here, here, and here looks like the 97 area is a lot better for a potential reversal going upwards. Weekly chart, we do have 2 pin bars. As I mentioned last week, we did have a pin bar as well. So this week, what could have happened was we might retrace up to halfway or something and then continue dropping. That seems to be the case right now, but we do have support on the way down. It's sitting at support right now, actually. So on the daily chart, this line right here, this blue line, so I think I should change this to, I'll change it to red so that's a little easier, so you can differentiate between the red and the fib lines. So this red line right here is previously resistance, which could potentially become support for the coming week. So we're at support right now. Based on what happens next week, we could be bouncing up. If we do bounce up, then we're targeting, as I mentioned, the 9596 possibly, or possibly the 97 level. Otherwise, if this level breaks down, then we're going to go straight back down to 89 and possibly even below that. As I mentioned previously, during the summer, we're targeting down at the 0.8, possibly 0.7 levels. So like way down there, 1,000 pip drops below that level if it breaks 0.89 going downwards. So that's it for the daily chart. So we're mainly focusing on this red line here. 4-hour chart, we did break the trend line. So from a 4-hour perspective and also from the weekly perspective with the pin bars, we did break downwards. We broke the trend line. So this one was broken previously. I mentioned we might test that up there. Doesn't seem to be happening. And then this week we broke the shorter term trend line as well. That was from this low and that low. We broke it here. We retested it. I think this was on either Wednesday or Thursday. Retested it at 94. Went right back down as well. So now we're at the next support, which is 9.3. If it bounces here, it's going to go up and possibly retest the 9.5. If not, then it's going to go straight down. Next up, we have the euro dollar. Euro dollar looks pretty bullish on the monthly chart right now because we're still stuck in the 3.5 area. But as I mentioned, we didn't move. So last week, we closed around the same exact area. So, like for example, if I go to the weekly chart, you'll notice a small candle. This small candle compared to last week's candle shows that we didn't really move at all this week at all. So going forwards, based on that candle, you could say that's a possible reversal candle because it's a hammer at the top of a trend. It's not as strong as a shooting star, but it's a possible reversal as well. Depending on whether or not it can break the top, which is at 357. If it can't break that, then possibly we might be going back down short term. But I still like the target of 1.37, 1.375 as potential targets to the upside before a full-on reversal back down to the 1.27 area. So that's it for the weekly chart. Daily chart, nothing much to say. You can see that we were just up and down this week. So the targets, as I mentioned before, we're targeting possibly the 1.36. So this is the 161.8 fib line, and then up here where the two lines intersect, that's at the 1.375 area. Anyway, so on to the 4-hour chart. 4-hour chart just shows that we really were stuck in a range. Basically, we started here. We gapped up based on the uncertainty of the German elections. I think on Sunday night, Merkel did get majority of the votes, but she didn't have full power yet. So it was positive, gapped up, and then went back down, went back up, went back down, went back up, and now we're pretty much where we exactly started. We closed last week, I think, around the same price. We closed at 1.3523. We're at 1.3521 right now. So literally we only moved down 2 weeks between last Friday to this Friday. So there wasn't any movement on euro dollar. So that's it for this pair. Lastly, we have the pound dollar. The pound dollar, for the most part, right now looks pretty bullish because we've had a very strong green monthly candle this month, but we're also at the top of the trend lines. As I mentioned last week, we're near resistance levels, but we're almost into the sell zones of where I'm targeting to sell this pair. Right now, we're still stuck at the top weekly trend line. So zooming into the weekly chart, you can see this a little more clearly. Just to recap from last time, these highs here connected, that's the weekly channel line. If you look at the two pink lines, this is the weekly channel line. We're right at that level right now. So I will outline, I think, 3 or 4 possible scenarios for the pound dollar. Like, across the board, this is the one that I plan to trade, and possibly euro dollar and Aussie dollar if they reach their respective levels as well. But this one is the closest one to its levels. You could say euro dollar is only about 170 pips from the target, but this one is at one target right now. So this is scenario number 1. So for scenario number 1, the pink magenta line holds, and the next week we just start going straight down. Because last week we had pin bar like candle. It's not exactly a perfect pin bar. We did have a long upper wick and a small body, but that's not a perfect pin bar. This week we retraced the entire wick, and we're closing right at the top of the wick. So, and which is also coinciding with the trend line. So first scenario is it bounces straight down. That's scenario number 1. Scenario number 2, and I'll switch to the daily chart for this. Scenario number 2 requires us to go all the way up to the upper trend line and also test the black line, which is previously resistance. There are 2 levels up there. There's the 1.63 and the 1.634. Depending on which one happens first. So those are 2 targets up there. That's the next sell area. But technically speaking, the triangle, the blue triangle that you see here, that's the entire sell zone. That's between the pink trend line and the black trend line and the black resistance up there. So that's scenario number 2. It gets up to there and then goes down. Scenario number 3 is the thing with scenario number 3 is the markets, or like in general the market makers, they know that most people are going to short at 1.63. What are the odds of them overshooting 1.63? Because they know you're going to have stop losses right above that. You're going to have buy stops right above that. So they're going to try to make you lose money. So they're going to overshoot it. So let's say they go to, say, 1.64 or 1.65 instead, and then go back down. So that's scenario number 3. Overshoot and then go back down. Scenario number 4 is the safest of all the options because it requires confirmation. But scenario number 4 is basically, we don't know when it's going to bounce, but after it does bounce, it's going to go down and it's going to break the red trend line. When it breaks the red trend line, that's going to be the sell signal. But if you enter for scenario number 4, you will have missed out on about 200-300 pips depending on when it bounced. But that's the safest trade. So there are 4 scenarios. I don't know which one is going to play out, but those are the potential paths for the next 2 weeks. So I'm not going to bother switching to the 4-hour chart because there's nothing to look at. The daily chart pretty much sums it all up. So that's it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and I'll see you guys next Saturday for next week's FX Weekly Analysis.